FutureTrend channel is glad to welcome all of our subscribers. We are ready to present our point of view of how to trade major currencies and world financial markets for the date of 30th of January 2019. Of course, the most interesting event of today is the Federal Open Market Committee meeting. The market at the moment is more or less priced in no rate hikes for 2019, and probably in such an environment it will be especially interesting how the president of the Fed, Jerome Powell, will react to the current sluggishness of United States as well as world economic data. And another focal point of this week is United States-China trade talks, and of course probably most important economic data in the form of United States jobs report that's scheduled for the end of the week. In such an environment like today, the market should concentrate its attention around the results of today's Federal Open Market Committee meeting. Also, another interesting point of view is the current weakness of the British pound that should be associated with the last rejection by Britain lawmakers to give some other opportunities to the British government to expel a kind of so-called chaotic exit of the UK from the European Union. Let's to remind you that the deadline of the so-called Brexit is scheduled for the end of March of 2019, and now let's say the truth, the things getting tight for the British pound, because we see that still British lawmakers can't come to a common point of view of how to resolve current problems associated with the Brexit. At the moment, anyway, the market suggests that sooner or later the situation will calm down, and the so-called Brexit deal will be signed. The so-called Brexit deal will be approved by British lawmakers, and probably that's confirm the situation of a British pound right now, because as you could see, the British pound is not looking so weak. Of course, it's a little bit lower from the highs of this year that was registered around 132.17 during previous couple of days. Now it's a kind of a small correction. From the technical point of view, there is a kind of immediate bullish trend line located at 29.60 at the moment. We suggest that the market will try to find a base around at this level. So from this point of view, we suggest there should be an opportunity to enter a fresh long in a position in case of testing of the aforementioned uptrend line. As regarding the euro dollar, as you could see, we still keep our long trade recommendation. Of course, a lot of will depend on today's results of the Federal Open Market Committee meeting, the reaction of Jerome Powell to the current United States government shutdowns, in case of any kind of reaction to the last United States government shutdown and its impact on United States economy. The United States dollar could come under additional selling pressure. And as regarding the dollar yen is looking especially stable at the moment. There is a kind of small support around the level of 109.10 the currency should break to the downside to extend its potential, its bearish potential, which is looking especially strong at the moment after a so-called flash crash we witnessed at the beginning of this year. We suggest that from technical point of view, the dollar yen continuing to trade below its moving average 200 daily line allocated at 111.25, and overall the pair, while trading below its psychologically important level of 110, should further test the downside at the moment. Probably the same applies for the dollar Swiss. There is a kind of so-called psychologically important parity level, and while below that level the pair should continue to trade lower, but of course there is a confluence of 100 and 200 daily lines allocated at 0.9903, and the pair should break and close below these two lines to continue its trending lower and test its current uptrend line allocated at 0.9750. As regarding some other currencies, let's see the situation, for example, with the Australian dollar, which looking especially buoyant this morning because of slightly higher overshooting of Australian consumer price index that was released this night. As let us remember you that the actual number came at 0.5% on a quarter basis against an expectations of 0.4%. There is a kind of strong resistance in the pair around the highs of 74, around the 74 level that was reached on December 2018. We suggest that sooner or later the pair will be back to these levels, and that's why we still keep our long trade recommendation in the Australian dollar. The same applies, by the way, for the New Zealand dollar and also for the Russian ruble crosses. In both of them, in the euro dollar and in the euro dollar and in the dollar ruble, we continue to keep our long trade recommendation. Thank you very much for all of your attention of our channel and of our reports. We will be back to you at the same time tomorrow. Thank you. See you later, take care, and bye-bye for now.